So welcome everyone. My name is Michelle DeRosier. I'm the Senior Vice President with Fifth Avenue Real Estate Marketing, and I will be your moderator for today's event. Thank you all for joining. We're thrilled to have you here with us today. So to get started, just a reminder, you will be eligible for PDP credits by joining us today. We do ask that you stay for the entirety of the event and join in on the polls. In addition, we're also offering a $2,500 a value of $2,500 total in Visa gift cards for everyone who's attending today's live event, as well as anyone who posts on their social media. So this is your chance to learn, earn, and win. Okay, so I think we've got a poll up if everyone can make sure you're answering them. We'll have, I believe, 4 throughout today's event. So today we're joined by a panel of experts who will share their insights on the Okanagan Penticton real estate market, current mortgage landscape, and much more. So let me introduce you to our panelists. I'll get you guys to each wave as I introduce you, or maybe say something so that you pop up. First, we have Jamie Squires, President at Fifth Avenue Real Estate Marketing. Jamie brings a wealth of experience and a deep understanding of the real estate market.
Hello, everyone.
Next, we have Blake Laven, Director of Development Services at the City of Penticton. Blake will share insights on the city's development plans and community initiatives.
Good morning.
Perfect. We're also joined by Deryk Williamson and Tyler Trompetter, partners at Thrive Mortgage Co. They'll provide valuable information on the current mortgage landscape and creative financing solutions.
Hi, Deryk here. Thank you guys for making the time to be on the call today. Looking forward to it.
Likewise. Hello, everyone. I'm Tyler.
Awesome. Thank you, guys. Tanya Fletcher, Senior Personal Insurance Account Executive at Hub International Canada West, is here to discuss strata insurance coverage and considerations.
Good afternoon. Looking forward to it. Thank you.
Thanks, Tanya. Iven Tse, Principal at Iven Tse Law Corporation, will cover legal considerations for shared and secondary homes.
Thank you. Thanks for having me today.
And finally, last but certainly not least, we have Dory Monday, Sales Manager at Sokana and a real estate agent at Royal LePage Locations West. Dory's going to talk about the exciting offerings and promotions that we have here at Sokana. So welcome, Dory.
Thanks. Hi, everybody. Thanks for joining us.
Dory. Okay. So we've got a lot of exciting stuff that we're going to cover here today. We'll be discussing a range of topics and taking a deep dive into what's happening in the Okanagan Penticton market, some different insights and strategies, the current mortgage landscape, why the future of Penticton is bright, offerings and current promotions at Sokana, what mortgage options are out there for purchasers, strata insurance coverage and costs to consider, and other legal considerations for shared and secondary homes. So a lot to cover here. We'll jump into it and get going with our first panelists. So Jamie, I'd love to start with you and just kind of cut right to the chase here, discuss what's on everyone's mind. In light of the recent government intervention, like the short-term rental ban and speculation tax introduction, can you shed some light on what's happening in the Okanagan, particularly the Penticton market right now?
I'd love to. So in regards to the short-term rental ban, I would say before the ban came into place, about half of the buyers at most projects were investors, looking to use the short-term rental as a means of financing. Many of them were going to be using these properties as vacation homes and family vacation homes that would be financed for their family by the short-term rentals when they weren't using it. Now that they're unable to do that wholly that way, we are shifting our focus towards more of an end user campaign, including obviously local buyers, the regular vacationers that can afford to finance these vacation homes without the necessary need to short-term rental them to make those mortgage payments, as well as your long-term investors, which, you know, they're looking to buy the homes, complete on them, and rent them to the regular rental market at completion. Another great benefit, though, there is a little bit of I'd almost say a loophole in the new short-term rental ban that could really benefit our retirees, especially those who like to travel or are regularly known in our market as snowbirds. Basically, they live here, they have a primary residence, say in the Okanagan of BC, but they like to spend, you know, 3 to 4 months of the year down south, typically during the winter. So those people would have a benefit where that home is actually their primary residence. So while they're down south or, you know, escaping for winter months or maybe going on a holiday in the summer to visit family or whatnot, because it is their primary residence, they could actually short-term rental out their home, especially a home at Sokana, where we have the added benefit of the storage lockers and extra bike lockers that they can use to make that an easy move and something, an option for them. Making their home more affordable in the end for themselves as well. Increased interest in shared ownership models are also providing more flexible and affordable options for primary residents or families going in together on one home to share in order to make the payments work. So, you know, maybe there's some siblings out there that want to buy a home and then you can all use it together or one family at a time while you're all paying for it, and it becomes a family vacation home. Aunts, uncles, cousins playing together on the lake, swimming in the pool, just gives you an idea of how you can do all of that. Penticton has a really unique lifestyle and amenities, which make especially Sokana an ideal choice. But just because of the location, you're walkable to Okanagan Lake, which is the main lake where the Whibbit and everything fun is located. Access to the channel to float down the river is right at your doorstep. Restaurants, amenities, shopping is all right there and walkable. So that's what makes Penticton more of a resort style lifestyle as a whole. And yeah, anyone who lives here and any other place that travels or works for family and vacations in the onset can benefit from these arrangements. Again, as long as you're using the home as your primary residence, you can still Airbnb it when you're not there.
Awesome. Thank you, Jamie. Yeah, it's definitely been interesting to see the shift in what's happened throughout the Okanagan with the short-term rental ban. On another note, well, we're thrilled to have seen the Bank of Canada reduce key interest rates to 4.75% back in early June. We may still have some time before we see interest rates come down closer to pre-pandemic levels. Deryk, what impact would you say interest rate increases and uncertainty has had on purchasing power?
Yeah, I mean, I think there's a lot of misconceptions around this, and to be blunt, like increased rates definitely do impact qualification, right? It impacts buying power. I think it's also kind of stalled a lot of people. A lot of people mentally just push to the point of we're just going to kind of wait and see what happens. We're going to wait till rates come down. And, you know, you can look at that from both angles, as pretty much everyone on the call would probably recognize. You wait until rates come down, property values go up, you're back to competing markets, right? So there's pros and cons to both sides of that. And I think a lot of people, as much as the market has slowed down, a lot of people have started to make sense of these interest rates, right? We've been dealing with this for quite a while now, going on 2.5 years, right? And even looking back to, you know, a year and a half ago, we were looking at 3-year fixed rates, which are kind of the most common right now, of about 6.5%. Whereas today, those are sitting in and around 4.5% to 5%, depending on down payment structure and whatnot, right? So we have seen a significant decrease in fixed interest rates, which has really put things back into a more reasonable level for a lot of people, although they are inflated still. You know, to talk about the Bank of Canada piece, it's, you know, it's great the Bank of Canada is coming down. I think there's a lot of positivity behind that, but I think a lot of people aren't really recognizing that that's not the relief point that people are looking for right now, because there's not a lot of people going into variable mortgages, right? There's not a lot of people going into that product because the rates are quite significantly higher than fixed. So, you know, if we were really going to put emphasis behind a rate change and that driving a market change, that really should have happened about a year to a year and a half ago when fixed rates came down significantly, right? At this point, we probably need another 4 Bank of Canada drops to get variable kind of in line with fixed, right? So I would suggest anyone on the call, the Bank of Canada piece, there's definitely positivity behind that. And I think every time they drop rates in the near future, we're going to see more of a push behind that. But really, when it comes down to pen to paper, there's not a lot of people opting for that product, right? And again, misconception, I think a lot of people that aren't in the market or they're not, going through an application or working with an agent, everyone thinks the market's stalled, the values are down. As a lot of us on the call probably know, not necessarily the case. Like it's definitely slower, but values have stayed relatively consistent. There was definitely a dip when rates started to go down, but over the last 12 months, depending on where you are geographically, values actually went up. And we've seen a lot of people just making sense of this market, right? There's a lot of people that have been in the market for a long time. I mean, if you've owned a property in certain parts of BC for 10 years, you've made a significant amount of money that, is probably equated to a point that you could leverage that and buy a secondary home without any personal cash in, right? So we have to keep in mind that as much as rates are high and costs have increased, there's a lot of people that are equity rich, I guess you could say, right? That and leverage starts to make a lot of sense, especially as rates continue to come down. I think for all the agents that are on the call today, one thing to keep in mind if your borrowers are talking to a bank or a broker, or what have you, you can see a drastic difference from institution to institution on qualification, right? If someone was just dealing with one specific lender and they're coming back saying, "Hey, I don't qualify, I can't qualify for this property," it's always worth a second opinion. Quite literally, if we compared lender A to lender B, we sometimes see a difference of around 200 to 250,000 in qualification, depending on the scenario, just because of the programs that they have, the policies, the exceptions they can make, how they're looking at rental income, right? So it's hard, but never leave it to your client to kind of make that decision that they don't qualify, and make sure they get a second opinion from a broker, because brokers typically are always going to have access to lenders with different programs and policies, right?
Yeah, no, that's great information. And we'll make sure that we get your and Tyler's information out to everyone here after the event, because I know you guys are doing a lot of creative lending these days in today's environment. So we'll make sure to make that connection. Okay. Jamie, we've talked a lot about buyers and how they tend to follow the herd. Can you speak on the psychology of interest rate changes in today's landscape?
Absolutely. So we've seen a lot of ambiguity and uncertainty in the market based on the interest rate increases over the last few years, despite that little drop we just had last month. But it has created what we call a wait and see mentality among buyers, which is why when we're trying to sell some homes, we have to help them create that urgency to get them off the fence. Something that's really different and great about pre-sale opportunities is they don't complete for a year or two. So today's interest rate doesn't actually matter when you're not actually qualifying for the mortgage today, you qualify at completion. So buying today actually gives you 2 years for interest rates to go down while you continue to make that equity in your product. I mean, as Deryk just mentioned, even during our big dip, prices have remained stable and even increased in most pockets. And that's due to construction costs, wage costs. I mean, unless we're going to start paying people less, I don't see how we could start building for less. In addition to the increased codes coming from, the province and everything, just making everything more expensive to bring to market and actually build in the end.
Right. I'm going to jump over to Blake Laven here and just talk a little bit about the future of Penticton. It definitely sounds like there's been some recent challenges in getting buyers to commit, and there's a need for repositioning the way we talk about the future of Penticton. What does the City of Penticton have planned for future development and community initiatives that help support making longer term investment decisions for buyers?
Sure, thanks, Michelle. And I think I'm going to start with the fact that Penticton is a great place to develop real estate products. We're a well-resourced department. We have a high level of training and sophistication for projects of all complexities. So we are seeing a lot of development activity in the community. We do about $120 million worth of property development per year in our community. So it's a great place to do that business. Our costs to build here are lower than comparable places, and our processing times within our development services division were actually recognized by the Urban Development Institute as some of the lowest in the province. We like to say we provide a concierge level of service. We have a really progressive council right now with the desire to see the community move forward. So I think we're in a really good position when it comes to developing projects, especially a project like Sokana, that we were super excited to see outside developers come to the community and make those investments. And I think we've worked really well with their team, and looking forward to further developments with Kirkhoff moving forward. Where we're turning our attention now at the city is really marketing the community. So all these great products that are being developed are seeing success from a sales side. And this has really been a big focus of our marketing efforts. Just to sell Penticton is a great place to live and work. We have a welcome home campaign right now where we're focusing on that work-life balance. So your 10-minute commute to work and your 5-minute commute to recreation. And we're seeing a real shift in the demographics of the people that are actually moving here, based on a lot of the work that we're doing and the types of real estate projects that are being developed here. So we're seeing 60% of people that are moving here are still in that working age cohort. So it's changing that view of Penticton as this retirement place into much more active, much more vibrant place. Great. Everybody knows about the great restaurants and beaches and recreation here. So just trying to capitalize on that. Strong entrepreneurial spirit in the community. So we don't have the big key magnet industries here. So we often have spouses that are dragged here for work, and they want to start their own businesses. So a really strong entrepreneurial spirit, and we really try to encourage a good environment for starting business here. And because of that, we were rated by Globe and Mail as the 20th best place in Canada for entrepreneurs, and that's out of over 400 communities that were reviewed. And we're actually rated the 3rd best place for young entrepreneurs. So we're really trying to lean into that and trying to create that really good business environment here. And then just lastly, we've been working with several media outlets on these resident recruitment strategy, including like the Western Investor magazine recently did a piece on Penticton, what a great place it is to live. Invest in BC magazine, Globe and Mail, other provincial and national publications. So just trying to support some of the efforts and amplify the efforts that other marketing campaigns are doing so that the story is out there.
That's awesome. Yeah, it's been interesting to watch Penticton with what's happened in Kelowna over the last, several years and the growth that they've seen. I think it was only time until we start to see that growth in Penticton. So it sounds like you guys have some exciting future plans for the community, and great to hear that we're seeing more families moving to Penticton, because I think traditionally in the past it was viewed as more of a place to retire and go. So that growth is fantastic. Okay. Dory, I'd love to chat with you a little bit. Now, it's clear that the city of Penticton, and I know you're a Penticton resident yourself, born, raised, and rooted in the area, so you know a lot about the growth as well. It's clear they've got plans, and there's room for value appreciation with well-built and thoughtfully developed homes in great locations. Can you tell us a little bit about why you believe Sokana is Penticton's most desirable and fastest selling community or condominium address for Penticton?
Hi, I absolutely can. I'm right next to the construction site right now, and I'm about a 5-minute walk from the sandy lakeshore of Okanagan Lake. We have a boardwalk along Okanagan Lake, so I'm not sure who really knows Penticton, but I feel a lot luckier than everybody else right now because I get to live here. It's really, really hot. You can dip in the lake in 5 minutes. The location of Sokana is like it's the north end of Penticton. So as a realtor for the past decade, almost everyone that's wanted to move here has strictly been looking at the north end. I used to have a condo downtown, and it didn't have any amenities. This is the first complex in our town in 20 years to have a pool. It's also got a year-round hot tub. There's 2 phases. So the second phase, this phase 1 is sold out. We've got a little putting green in the middle, communal barbecue, a shared kitchen, a co-work space. So you can actually have your work-life balance. You could probably have it as an office. You can be 5 minutes to the beach along Lakeshore there. That's where everyone goes. I'll say famous because everyone seems to know the restaurants. We've got Salties. Actually, the fine dining's come a long way. We have another Sociali, locally owned. Elma. Before you hit the restaurants, though, about 3 minutes, about a 3-minute walk, your kids are going to want to stop at local landing where they've got mini golf, climbing wall, bumper boats. There's cute little food trucks along there, and then it's a beautiful boardwalk. So you're walking along the lake. There's a guy the other day who was walking goats, just like a beautiful, energetic, vibrant lifestyle. There's the Wibbit. The kids can go on there till about 8 p.m. And then you can head along to the big gym. Even though Sokana does have gym facilities, there's a pure gym and juicery where you can get your fresh smoothies. Saturdays, Penticton has the largest market in the Okanagan where you can get your fresh produce. There's also the KVR trail, so you can bike. I think I went from the Sokana site. It took me 3 songs running to get to Munson Mountain. That's where the wineries are. There's Poplar Grove. I could go on. I know you might cut me off with the location. Also, sorry, we're right across from the Penticton Golf Course. So we haven't had new development where you can actually walk across the street and be at an 18-hole golf course. It's pretty unreal. Never mind that, you can also feed yourself because there's the Riverside Village where you've got your groceries, your liquor store, your pharmacy, your coffee shop, your booster juice. And that's all been developed within the last, I think it's like 6-ish years. So this north end, along with the North Gateway project, the city's put a lot of funds into the infrastructure to be able to have complexes like this. And this is kind of the only one that's really going up. I'm staring at it right now, huge crane in the sky. All the locals know about it. I feel like it's my bat signal, like, where is it? I'm like, look to the lake and then the big crane. So the lifestyle it offers is all on foot. I think about my retiring one day, aging mother, where she can go be by the pool, be safe, secure parking, have storage, bike locker if you want it as an upgrade. There's nothing that it's missing. Like people have called in the past and said, I want to walk to a golf course. Sorry, like you're gonna have to drive. And even in Penticton, the other lake where Sokana is located, you can whip to Kelowna with no traffic because you're at the north end, so it's the last stop. And or you can get to Skaha Beach. It's 8 minutes in car to be at another lake, which is a quieter lake. And same thing, the KVR trails there. You can bike all the way through town. You can float. There's the launch to the channel, which is just across the street. You can't actually park anywhere better. Like your parking lot is the best parking spot. So I could go on and on about location. It's just unreal. Like there's actually no comparison to an enjoyable life. And yeah, we're seeing those grand condos in town right now. It's perfect buyer profile for people that just come and want to be an athlete. We've got the bike lanes, we've got the KVR trail, we've got the lakes, we've got everything.
That's
So,
awesome.
yeah.
Yeah, no, Penticton, there's a lot going on and the growth has been quite amazing. So definitely feel your passion for it, Tori. Can you tell us a little bit about the builder, Kirchhoff, who is bringing Sokana to life? They're not new in the industry, but I believe this is their first development directly in Penticton. So let's talk a little bit about Kirchhoff and who they are as a builder and what people can expect on the home that is delivered to them.
Is that me again?
Oh, yes. Sorry, Dory. The question is for you. Yes.
I know they've got a great reputation and everything's been going ahead smoothly, lots of updates. I've heard from the local intel in the builders world that they're a great product, very reputable, lovely, everything so far is so good. So I'm really pumped. Yeah, I can't really say enough good stuff about it, but there's a ton of people there all the time working and they've been their story was pretty phenomenal, but it's not really mine to share, and I don't want to get it wrong.
That's fair. Jamie, maybe I know that you've got a long-standing history with Kirchhoff. Do you want to tell us a little bit about, I know you've worked with them on other developments, both in the Okanagan and here in the Fraser Valley and Lower Mainland. Do you want to speak to our experience in terms of quality and what buyers can expect from a Kirchhoff home?
Absolutely. So Kirchhoff is very well known. They're a multi-generational family builder. Kirchhoff is the last name. They've been building in the Okanagan for quite some time, as well as in the Lower Mainland. Their home base office is actually in Chilliwack. It's about halfway to one or the other, depending on how you look at it and where you want to go. They actually are a construction company as well. So they actually build developments for other developers. So you could actually buy a development from another developer that Kirchhoff is building and not know that it's a Kirchhoff building. They do purpose-built rental all over the place. They've done plenty in Kelowna. We've actually worked with them in the Fraser Valley. We've sold townhomes for them in Chilliwack recently, overlooking a golf course. Ironically, they seem to like the golf courses. We've sold a few towers with them actually in Kelowna. So we did 1151 Sunset with them, completed, people live in there. We also did One Water West with them. They are a phenomenal builder with quality. We can feel this because when the move-ins happen, it's one of our clients where we get very few to no calls at completion, which means the quality's there. No one's complaining about construction or deficiencies at the end, which is great because that is rare. So we know when we're completing a Kirchhoff project that they are delivering what they promise, and we love working with them.
Awesome. Thank you, Jamie. Dory, I'm going to come back to you here. If you can tell us a little bit about what current offerings we have at Sokana for realtors who may have buyers who are looking in Penticton, specifically the promotions that are being offered right now.
Absolutely. So right now, for the next 30 homes, we're offering a $30,000 credit. We also have a 10% deposit structure, so 5% up front. Then you can do another 5% in about 12 months, which is pretty unreal considering you've also got a 2028 closing. So, 20,000 now, for example, another 20,000 in a year, and then you can plan to close on it and get your mortgage financing. Lots of time to get everything established and proper how the guys want to see it to make it all happen. Working with our fellow realtors, we're offering a commission of 4 and 2. You just need to send them over to me. I can pop all the information in, send you a copy of the disclosure statement, the agreements. Hopefully I'm not missing anything. I think that's it. So the next 30 homes will have a really, really good compensation structure, a really low deposit. Yes. We also are offering currently 0% assignment fee. So with the developer's approval, we can usually it's a 3% lift. However, right now it's 0%. So you can safely enter into your agreement, secure your home, and then if things change, you can always just find a friend. I'm sure they'd like to hang out with me downtown Penticton, especially if they come in the summertime. So yeah, right now that's a really good promo. 30 grand off, 0% assignment fee, 4 and 2 commission, and again, for the next 30 only.
Awesome. And I believe there's also opportunity for reduced deposits. Am I correct, Dory?
Well, it's normally 15%. So
Yeah.
we're at 10% now. And if they want to go lower than that, we can bring it. But I think 10% is pretty low right now.
Yes. Yeah. For Sokana. Awesome. Thank you, Dory. We'll make sure that we package up everything regarding Sokana, the incentives and promotions that Dory shared with us here today. So those get sent out to everyone here attending today's event, along with Dory's information so that you can reach out to her with any questions that we may have not answered here today. Tyler, now that we know the context of the market, where the current buyer psychology sits, the future of Penticton and promotions at Sokana, what options do buyers have when it comes to ownership and mortgages?
Sure. Well, at the very basic level, anytime we're talking residential real estate and qualifying for a residential mortgage, you're essentially looking at three main categories or buckets, right? You have your primary residence purchasers, which is exactly like it sounds. Someone's buying the home to occupy it as their home. The second tier would probably be investment property purchases. I know we've been chatting a little bit about Airbnb, but if you're looking to purchase a home and maybe position a long-term tenant in the building, that would be a residential mortgage option for you. And then the other piece is going to be your secondary home or vacation property purchasers, which again is exactly like it sounds. One thing I'll just quickly touch on like the secondary home and vacation property purchase, like a barrier we always come across with buyers or potential borrowers, and perhaps a big misconception in the industry is most people assume that buying with less than 20% down, maybe 5% or 10% down is only available to first-time home buyers, which is totally not true, right? You could complete the purchase of your first home for 5% down, live in it for a couple of years, and then decide, yeah, I want to move up and buy. Oh, I don't have 20%. Even after selling my home, I might not have 20%. I need to wait. Not the case, right? We've helped multiple clients over the years complete a purchase with minimum down payment and then keep that home, maybe rent it out, especially if equity appreciation is significant and they can throw a renter in there and they might be able to buy that next home with as little as 5 to 10% down. The only stipulation really is if you're qualifying for the mortgage with the intent to rent it out long term, then of course you're going to need to get to that 20% down payment threshold. On the Airbnb piece, if you're looking for maybe like something positive, the fact that it's basically gone or severely limited is actually not going to change qualifying at all, right? Previously, and it's been a tricky spot to navigate for mortgage brokers. If you went to the bank and said, I'm going to buy this home, I want a mortgage, and I'm going to Airbnb it, in most cases, it's a pretty quick decline, right? Major banks, most lenders, they want nothing to do with short-term rentals on their residential mortgage book, which is what we're talking about right here. They would deem that a commercial mortgage transaction, which is usually going to severely limit the amount you can qualify for. You're going to pay significantly higher rates. There's larger fees. There's a whole other set. It's a totally different qualifying bucket to go into. So like I said, if you're looking for some ray of light, like hearing that if you're talking to buyers, oh, Airbnb's gone, it's not going to impact your qualification because, typically what people were doing were qualifying under a rental program, and then, maybe throwing an Airbnb or in the property afterwards, right? So just wanted to hit on that. Deryk mentioned co-ownership, and I know we've talked about that a little bit. That's something that would be available in all three of those categories I was talking to, with really no difference in the qualification. If you have two individual buyers, maybe family, friends wanting to co-invest, the process is very much the same. It's just now we have multiple borrowers on an application. The file's a little bit thicker. I mean, these days the banks are asking for everything, except for a blood sample, it seems like. So there's the amount of documents isn't going to be any different. But two quick things on that we always come across as mortgage brokers is, if you get people that want to co-invest or purchase a home together, maybe they come together and they want to put two names on the contract. Probably one of the more common things we come across is maybe a parent and adult child purchasing maybe an investment property together or maybe a home together. And the parent's like, look, I'm providing the down payment, you take the mortgage. A bank will not allow one borrower to be on title and one to be on the mortgage separately, right? Anybody's on title has to go on the mortgage as well. A bank won't let you chop it up simply because they can't foreclose on, part of a home, right? So just make sure you're having those conversations when you're working with multiple buyers, maybe purchasing a home together. I mean, I've come across that with my own family. And the other piece too with that is, people can't come together with their own pre-approvals and with their own mortgage financing. Everything's got to be on the same application. They got to be applying together. Earlier you asked me about some trends. Like I know we talked about rate cuts. More than anything, I know Deryk dove into not many people taking variable rate mortgages. That might be maybe 5% of the people we're helping, probably even less than that, to be honest. But it's driving sentiment more than anything else. Like if you talk to any active mortgage broker, easily the busiest time in the last almost year was probably around January, February, because if you remember in December, there was a lot of talk from various central banks around the world saying, okay, we're cutting rates this year. And January was the biggest month we had for pre-approvals in like the previous, 3 or 4 months combined, even though the impact on borrowing was basically zero, right? And it's still pretty close to zero because nobody's taking a variable rate mortgage. So if we see another cut coming in July, which, after some inflation reports that came out today is looking better than a coin flip, we certainly feel like we're probably going to see another uptick. So a lot of the people we're helping today are under the understanding that let's get ahead of the rate cuts, because there's always the inverse relationship between rate and price. Sure, you might wait for rates to come down, but what's going to happen when rates come down? Price is going to go up. Obviously with elevated rates that we've been dealing with, qualifying at various lenders is become a challenge, right? So Deryk mentioned positioning yourself with a good mortgage broker, mortgage company that can come up with alternative options is pretty important right now. We never assume that a buyer isn't, willing to look at different options because probably the biggest growing space in the mortgage business over the last 10 years has been the non-bank mortgage channel. Like if you'd imagine like a bank's guidelines and major banks lending guidelines, they're shrinking almost yearly, right? And those borrowers are ending up in a different lending bucket, and that space is growing, especially when it comes to people trying to purchase, their second, third, or fourth property, or maybe they're self-employed, or there's some reason why they can't get the mortgage financing their bank's going to offer. That doesn't necessarily mean there's going to be no options for them. So we make sure we're going through the full Rolodex for them and presenting every option available.
Thank you, Tyler. I guess what I've heard here a couple times is if you do have clients looking to purchase pre-sale new home, now's the time, especially with longer completion timelines, because there is anticipation that rates will go down. So great information. Really appreciate you being here today. Iven, I'm gonna come over to you now and ask, what else do people need to know about these types of ownership?
Well, the two categories of the discussions that a lot of clients are asking now, one is the costs. What are the typical types of costs and taxes involved when it comes to these types of purchases and ongoing costs during the time of ownership? And the other thing too is regarding the idea of like if more than one person that's not in the family buying, like friends and family, and there was mentions of the co-ownership and when Jamie was talking about and Tyler as well, when people are borrowing money together and investing together and living together and sharing time in this house together. So there's a lot of these issues that come up, and I'm going to talk a little bit about what's important when it comes to these types of arrangements. Maybe first thing is about cost. One of the nice recent things that have happened in the legislation lately is the increase in the exemption amount for first-time buyers, and also the increase in the amount of the people eligible and the value of for newly built homes. So, it's 1.1 million now for a newly built home that you can be exempt from paying the PTT if you're going to buy this house and be the first person buying into this lovely community. That's Sokana. And that, you can buy a property up to 1.1 million. And even, and I'm thinking that the credits that they're offering won't be a credit in terms of deducting, possibly reducing the purchase price, which means you can have a 1.1 and 30,000 on top value home, and then knock down 30,000, then it'll be even better. So anyways, these exemptions are new in terms of the threshold of what you can save. Now, once you buy the home, then there's other things that do kick into place. Now, people do talk about the Short-Term Rental Accommodation Act, what's required, and Jamie mentioned about snowbirds as a kind of a category of clients that may be wanting to buy them. Now, one of the things, and I'll go backward a little bit in terms of the taxes involved. Because we're looking at this new place in Penticton, the development here where people are moving to. Blake was talking about all the new things that are happening. So if people are going to thrive there now, if you want to rent it, buy and rent, Now you have this short-term rental accommodation act. What is the rule? The fact that it's there doesn't mean it's insurmountable or you can't work within the rules. So the idea is that if you have to have it as a principal residence. So live in that place for more than you're not living in it during the year. But so that the time that you can spend, when you're 3 months away, for example, you can still do this. But here's the kicker, and maybe Blake can confirm this later on too as well. It's not that expensive to get a business license, which is one of the requirements. You need a business license to operate the Airbnb short-term rental accommodation, like for your premises. I think it's like if you do it one person in a condo and you only one tenant, then it's like $400. I think application fee plus couple $100 the annual license fee, and you pay for it, and then that's like $400. Now think about if you're going to rent it on Airbnb and what you're going to make as a result coming back. So 3 months out of the year that you're not there in the summer, or perhaps in the winter when you're not there, you rent it out, and then you follow the rules. It's your principal residence, so 3 months or four, like at least not anything more than that perhaps. And then you get a business license. Okay, so you have a business license, and you also it is a principal residence. So that's the short-term rental accommodation rule. You have to live it, but you can also rent it out, and it's not that expensive in terms of the cost of a business license. Okay. Now the other thing is people think about is while you own it, if you have a tenant, you have to worry about the BC speculation tax. Okay, so the idea is that if you have it empty, and that you can find a tenant, then you're facing a 0.5% tax on the whole value of the assessed value of the home, which can be quite considerable. But the idea is that if you rent it for 6 months of the year in 1 month increments, then you can be exempt from paying this tax. You have to rent it for 6 months on a long-term basis. Because you on the one hand you have the Short-Term Rental Accommodation Act, so maybe you have a short term for 3 months. But if you want to think about the BC spec tax, and that's more important than not, then rent it out for 6 months of the year, and then you're exempt. Now, one further thing too, in the year of purchase, you have a bit of a reprieve. I don't know when during the year in which Sokana may be, for example, ready for sale. Completion date is a couple of years away. But the idea is that in the year of purchase, there's an exemption from the BC spec tax. If you pay property transfer tax for the purchase, if you don't, or if you're exempt from that because of the new home buyers exemption or the newly built home exemption, either one of these exemptions for the purchase, you're exempt from that spec tax for that particular year. Now it's that particular year, even if, for example, you buy in February, you buy in March, so it gives you a little bit more time to plan to get a tenant in. So you got these two things in the spec tax, and you also have for example, the new short-term rental accommodation acts that applies. Now, one further thing, I know that you guys are marketing the Sokana and Penticton. It's one of those cities which is applicable, but the importance of having someone check the regulations, because cities are added in, and so from time to time. So you may think, oh, I got this place here, and it may be exempt, but it may be changing, and it does change from time to time. So that's also important to keep in mind.
Thank you, Ivan. I know short-term rental bans, especially throughout the Okanagan, where that was a popular place to purchase short-term rentals. It's a hot topic, so I'm sure we will have lots of questions at the end when we get to our question period for you. Talking a little bit now about strata insurance considerations. Tanya, what should buyers consider about strata insurance coverage?
Sure, thanks, Michelle. So I'm just going to kind of dial back a little bit and do like condo insurance 101 and how that policy is built out. So you're going to have your master policy for the development itself once it turns over to an actual live strata number. And then each unit, of course, will then be responsible to purchase their own policy to protect their interest for their things, as well as their interest in the strata. So if you can take anything away from what I'm about to say is there's two components to a condominium policy that protects you as you and then you as an owner in the strata. So it's really important to be mindful of what the expectations from the strata corporation master policy needs you to carry on your personal policy. Up in the Okanagan, down here, I'm on the coast, I'm down in Victoria, so earthquakes are our biggest thing. But up there, you need to be mindful of what your assigned strata deductibles are going to be for water. That's for internal water in the building. So that's something to be mindful of. And then the policy goes on to provide coverage for things like improvements to the unit as the unit ages, or, I've seen it over my career where people buy new units and then they gut and redo what they've got. So you need to be mindful of what that looks like for the coverage limits on your policy, because it's going to be your personal policy that responds in the event of a loss to put you back to where you were if you've done some significant renovations to your condominium. Things like contingency insurance in the event that there's a shortfall from the master policy, it can be assigned back to you as a unit. You can put forth funds to repair and replace your unit. So those are just really important pieces. People don't realize that the policy covers themselves for their worldly possessions, as well as how it responds to protect them as a unit owner. It's a key piece that we need to all understand. So, as you look at this development, what sort of policy would you have? Is it a primary policy? Is it going to be a seasonal secondary, or are you going to rent it out? So it's just important to disclose that to your insurance broker of how you're going to operate that unit or utilize that unit. And then there's different coverages that are available, and some of the coverages are restricted if it's as a rental or as a seasonal, or if it's just a secondary. So let me define that. Secondary and seasonal are two different. So secondary means that maybe it is your primary, or sorry, it's like you work in Vancouver and then you go home there. That might be it, or vice versa. It's that you're only occupying the unit partially. Seasonal means you only go there on weekends, once a month type situation. I'm going to be truthful. Short-term rental has been the bane of my existence for the last how many ever years. So I appreciate from a realtor and development and income generating property, that's fabulous. But from an insurance perspective, it's been a huge challenge. Insurers do not like short-term rentals. So rented units, long-term rental, anywhere from 3 to 12 months is much more preferred in my world. I know it doesn't offer quite the same revenue potential, but it is much more stable. And the reason being is that when you have multiple people coming in and out of a unit, your increase, the ability for there to be a liability suit of some sort, or a water claim. Condos are terrible for water. It doesn't matter who lives there, but people who are on short-term rental, they're notorious for leaving water on or damaging the properties. And those are huge hits for the insurers. They really just don't like them. So long-term is always better in my world, more conservative. There's more bang for your buck on a condominium package that's issued on a long-term rental versus a short-term rental. Shared ownership is similar. There's the same options are available to you. But like I said previously, once you change that occupancy on that unit, your policy does claw back a lot of the benefits. And one of the benefits are things like your betterment improvements may not be as much. Your contingency limit may not be as much. So you just need to be mindful of that. And you need to be mindful of your rental income coverage as well. Depending on carrier, that may be picked up through an additional living line, or through an actual rental income. And with rents the way that they are across everywhere, you need to be mindful, because that will build, if the building was damaged and the tenant couldn't occupy, you would then be compensated for those lost rents up to whatever the stated limit was. So it is really prudent to be mindful of that. Over the last 2 years, extreme weather events have certainly become more of an issue in the insurance world. Obviously, the Okanagan wildfire is your biggest hit there, as well as flooding. Wildfire, we're seeing down in the States, is starting to be limited or purchased in chunks of value, or increased deductibles applied. So similar how to an earthquake line applies, you pay a 20% deductible. this is going to be a changing face. It hasn't happened here yet. I would suspect in the next couple of years, 3 to 5 years, you're going to see some change in that. And people just need to be mindful of it. And I think as this has come to the forefront this past year, all of you on the call, I'm sure you've seen your insurance premiums increase significantly, in particular this year. And it's wildfire. It's wildfire that's driving that, because no one is protected from wildfire. So I think as we get smarter, we develop our developments, be it a condo building or a residential neighborhood, we're getting smarter how we build. And that fire smarting a property will be your saving grace. But extreme weather events are going to continue to play the biggest role in your driving cost as well. Jamie, you touched on the construction costs. Oh my goodness. So that is another reason why you're seeing your insurance costs escalate. And if I could, my new tagline is that remember the cost of insurance. You've got to remember it's not the cost to build, it's the cost to build an unplanned build. So, you build a building, you've taken X years to do that, but if it all comes to the ground today, as an insurer, in a claim situation, it's unplanned and we're starting from scratch immediately, and what that looks like. So that is one of your driving costs on insurance as well. Sorry, that's my little soapbox on claims and insured values on things. Yeah, I think it's a great opportunity for people. I mean, be it as a primary residence or as a rental, I mean, there's lots of drive to be in that area, and a seasonal property as well. There's not an issue insuring it as a seasonal. There's lots of carriers that will take that on, even in the current landscape. Yeah,
Awesome.
that's insurance 101.
Thank you, Tanya. No, that's a lot of great information. And I think we all suspected with the wildfires we see in our province that would be coming. But the main thing you pointed on is really that replacement cost and where the cost to actually build these homes has gone. I think is something that a lot of people aren't, outside of our industry, aren't fully aware of what's happened to those costs in the last,
It's
5
significant.
years.
It's significant from an insurance perspective. I mean, builders obviously deal off of different formula than what we deal off of, we work off. The stats are, it's a 43% increase on Vancouver Island in the interior for insured costs, like a claims cost situation, that unplanned build. And Lower Mainland and Whistler is in excess of 65% from a claims perspective. Mm-hmm. So a year ago, we were averaging, like we do a calculation, we're like going off of condo, but just to give you an impact in our world, insured value for a standard home would be 300 a square foot. We're over 450 a square foot in just like cookie cutter, nothing special. So I mean, that's in less than a year. Those are big changes in our world.
Absolutely, yeah. No, and I think it's something we're seeing, and why there isn't that downward pressure on pricing that I think consumers thought we would see with interest rates going up is you cannot build this product any cheaper. So there is a number that we need to attain. I want to jump back to you just to have you speak a little bit on what else people need to know about sorry, lost my train of thought. Hold on, where's my note? I wrote it down when you last spoke. Oh, sorry, this was the question. If you can just speak to us a little bit about the anti-flipping tax. I don't believe we touched on that previous, but definitely an important topic that people would love to hear more about.
Yeah, sure. So there's new legislation that recently came up. It's the BC anti-flipping tax. There's a federal one that's already been in place for a year already, for quite some time. So, but there's 2 anti-flipping tax that people, when they're buying, they have to worry or think about. So the first one, maybe a little bit about the federal one, is a federal anti-flipping tax. So in the first year of a purchase that's and then if it's sold during that first year, then the income or the value, the difference between the cost of purchase and the sale is counted as income and then taxed as a person's marginal tax rate. So it can be quite considerable. But there's a BC one that just going to be that just came out in terms of and how they do it is the first year is a $20,000 flat tax. So anytime that the condo or a house purchase is sold within the first year of purchase, it's a $20,000 fee. And it's graduated to a lesser amount until 2 years is up, and then it becomes zero. But the good thing about the Sokana and any pre-sales is that the timeline, it starts ticking at the time the offer and sale and purchase is signed. So the contract is signed, and now 2 years later, it starts to sell. And if you buy it and then you sell it, the time frame actually starts from the time of the contract being signed, not at the time of closing. So that's a good thing. It's a nice exemption, and I think that that's a logical and reasonable considering how long it takes for a house to be purchased. And then if you buy it and you at the end of the time you may want to sell it, then you've got a time frame to look at. But with pre-sales, you got a longer time frame because it started from the beginning at the time of the contract. If you don't mind, Michelle, all these talk about co-ownership and mortgages and people joining together to buy houses and all of a sudden all these insurance risks that might happen. It just outlines the importance of having a really good co-ownership agreement in place so you can take care of all these things. You got to treat the co-ownership. Maybe you have a couple of buyers that are buying together in partnership. Don't just leave it to chance. They know exactly how to deal with it when something happens. And you have to think about an unplanned build and how much insurance costs are rising. And then one person says, oh, let's leave it alone. The other person says, let's pay for it. And we got to take care of it. And then one person can pay the mortgage, but the other person can't. And then they say, well, the lender says both are equally 100% responsible. So how do you deal with it? You need a good agreement to take care of all of these situations, how to use it, when to use it. Jamie was talking about people living together at different times of the year, how to share it, how to live together, how to split the time together and split the costs and share the responsibilities. And you need a really good agreement for that. So.
Yeah, that's a really good point. To wrap up here, I'm before we go to the question and answer period, Jamie, I was hoping that you can tell us a little bit about what resources are available to realtors looking to promote Sokana to prospective buyers, their own networks, and potentially other realtors.
Absolutely. So if you connect with Dory, they have a realtor portal where we can link you up, where you can get all of the information that you require, images, videos, information on Sokana itself that you can actually send like digital packages you can share with your clients on the offering and see if it's something they're looking for. In there, we really talk about the prime location. It's the best location that Penticton has to offer with the best amenities. First pool in 25 years. There's a heat warning this week. I don't know how you could live in Penticton without a pool, or at least being right next to the lake to jump in, as well as air conditionings, which Sokana homes also include. Very important up there. It's 27 degrees before 9 a.m. right now in Penticton. So it's going to be 36, 37, 40 plus degrees. And that's just starting now. So you're going to want somewhere to go cool off, be in that AC, be in that shade, and go use those resort inspired amenities, and essentially what is a great place to live, but it feels like a resort inspired town as a whole. And everyone living there wants to live that lifestyle. And this is your best opportunity to get in. It's a great long-term investment. Again, if you bought today, you don't complete for 2 years. You're not worrying about today's interest rates. If you want to go in on co-ownership, you could go and buy the home today, work out your co-ownership agreement as long as it's signed and done before completion. All of those understandings that Iven was talking about will be in place before completion, so you know how you're using, functioning, and paying for it. And then really just focusing on all the different benefits that people have going there and leveraging looking at their legal and financial considerations and options for that. There are a lot of creative solutions out there and tax implications to look at, but ways to avoid them, not evade them. Evasion is illegal, but avoid them is completely legal. As long as you're tax planning, it's completely great. Talk to someone like Iven or a financial planner for that. And then just target to your audience. Like, who are you talking to? Who of your clients do you think this is a great fit for and why, and then target your messaging to them. Again, there's no GST on new, or sorry, no property transfer tax on new. There is GST. The best thing about that is you can finance GST. No one can finance property transfer tax. So, you know, $20,000, $30,000 out of pocket on closing, or finance 5% and add 50 to $100 to your mortgage each month and don't even think about it. Owning brand new is just a great way to go. No assessments, nothing to worry about falling apart, and really target that. Based on the realtor portal I mentioned earlier that you can get from Dory, you can use these assets to promote things like our virtual tours, any follow-up to this webinar, and then just really reinforcing everyone knows real estate is location, location, location. Where else in the Okanagan can you buy and be on the channel, steps to getting access to getting on the channel and floating down there while overlooking the golf course one way and the lake the other way, walkable to both. There isn't anywhere else like it. I would say not just Penticton, but the Okanagan as a whole at this point. So it's got huge community appeal and it's the place where people want to be. And that's what I would just promote about that. There's so many advantages to owning at Sokana, in Penticton, and owning in Penticton as a whole as well.
Awesome. Thank you, Jamie. We do have assets for the realtor community to use. So renderings, visuals, content. So we'll make sure that you get access to the links so that you can use that for reaching out to your own networks. So before we wrap up here and say goodbye to all of our panelists, we do have a few questions so far. One question. Let's come in through the chat. Anyone who does have questions, please put them into the chat and then we will get answering them. So the first question is, and maybe Dory, I'll let you answer this one. Is the Airbnb allowed in Penticton knowing the last legislation? That is for Asha Logan.
I feel like Blake unmuted for this one. Am I right?
Or Blake. You know what? Let you guys jump in as to who's best to answer. But Blake, yeah, maybe if you can answer the Airbnb question specifically pertaining to Penticton.
Sure, and I can answer it from a city perspective, and if Dory wants to add any more information, she can certainly do that. So Penticton has had a very mature short-term rental, vacation rental program for the past decade. We were one of the first municipalities in the province to have a licensing program. We have over 400 licensed short-term rentals in our community. So the changes that occurred last year with the province did impact our program quite a bit. About half of the businesses that were operating as short-term rentals were impacted by the principal resident requirement. But despite the principal resident requirement coming into effect, Penticton still does license any vacation rentals that meet the provincial requirements. So I know a lot of communities have gone further than the province requires. They've put in different principal resident requirements or ban them completely in some types of product. Penticton still has a very permissive program. We do allow vacation rentals in almost any residential unit within the city. It just, you have to be the principal resident right now to operate them. There are some exemptions to that, which we are exploring with different developers and different business owners. But right now, still very permissive program, still very supportive. We don't have enough hotel rooms to support all the fantastic events that happen in Penticton, so we do rely on vacation rentals, and we have a long history of vacation rentals into the community. So you have a council and city staff and a licensing program that are very supportive of short-term rental.
Awesome, thanks, Blake. Moving on here, 0% assignment fee for Sokana. Jimmy, maybe you can answer this one. In the agreements, the assignment fee, the ability to assign needs to be approved by the developer. Is there any reason or chance of the developer not signing off on assignment down the road?
Honestly, absolutely. It really depends. So for a project like Sokana, I would say, depending on when you want to assign, the risk would be low as long as you're looking to assign once the majority of the building's been sold out. Once the building's sold out, most developers are going to allow it up until a certain point, which is usually a couple months before the building's ready to complete. They stop allowing them, and that's only because we're getting all the legal stuff in a row and getting ready to send notices to complete. So there can't be an assignment happening while those are going out, because then the wrong person will get the notice to complete. It's too close to the completion. So you just want to make sure you're probably, 4, 6, a year out, maybe even from completion to list that, depending on your realtor and their advice and where you're at. And that the majority of the homes in that building are sold out, then the developer is most likely going to allow it. Even if it's not wholly sold out, as long as the home you're looking to assign isn't the same or going to compete with any available development inventory, then there shouldn't be an issue. But those are the two reasons. One, at completion, to make sure we're getting the right person the completion notices and completing if it's too close. And two, to make sure that, all of the homes in the development are being sold so that the construction loan can be paid, and all those great men sitting out there operating the crane and building the homes for you can also be paid. But those are the only reasons.
Thanks, Jamie. Dory, what kind of year-round, more so in the winter, activities are available around or near Penticton?
Well, we have, and where you'll find me is up Apex. So we have a really underutilized ski resort. It's 30 minutes from Sokana, 35, depending on how you drive. There's no lineups. It's a beautiful, beautiful champagne powder mountain. I've been going there since I was little. I love it. There's also a lot of hockey. We've got the South Okanagan Event Center, which I don't think I mentioned, but it also hosts the Okanagan Hockey School, which is world famous. It starts next week, Monday morning. I've got my boys in there, and people come from all over New York. It's a really wonderful event. We've got the Penticton Bees, so hockey and skiing, if you're not a snowbird. Also, I did forget to mention a walkable is the marina and the yacht club with the tennis courts. I'm a tennis player. We've got beautiful courts right at the very end of Okanagan Lake. And there's the marina boat slips. So we also have 3-bedroom places. If you want your company to stay and you want to get yourself a boat slip, they can stay and enjoy your pool. Yeah, so hopefully that answers a little bit, but lots to do in the winter still.
That's awesome. Yeah, great to know about the guest suites as well. I know if you live out of town, it's always nice to have somewhere to host those guests. Okay, we have lots of questions coming in here. Blake, could you tell us a little bit more on where people can find information on the Welcome Home campaign that the City of Penticton is launching?
Sure, I can do that. And we have some great promotional materials. I can't really see it because it's blurred out, but I did put the link to our Start Here Penticton website, and that's really where there's material about what it's like to live. It's called Living Like a Local. So there's blog posts about the best places to get ice cream, and any new bars or restaurants or coffee shops that open up. Sometimes we'll go and interview the entrepreneurs that open them and try to highlight them. There's some great photos in there, lots of stuff about recreation. And we also, with the Welcome Home campaign, we try to catch as many new residents to the city as we can. We encourage them to fill out a small survey, which tells us where they came from, why they moved here, and a little bit about the demographics of their family. And you'll see the aggregated data to those survey responses on the Start Here Penticton website. So you can really see the types of people that are moving here, where they're moving here from. Really interesting data. And then when the survey gets filled out, they get a welcome home package, which they can pick up at City Hall, or we find ways to deliver it to them. And there's all sorts of materials about living in Penticton. There's free bus passes, swim passes, coupons for lots of different businesses. So those welcome home packages, I always tell realtors about them because they're great for if you have people moving from out of the community and they're coming here. It's just a really nice welcome to the community and lots of information about insider stuff that they may not get otherwise.
Yeah, that's great. Very unique. I've never heard of a municipality doing something like that. So
We won an award last year for our welcome
there
home
you
package.
go.
So,
There's
yeah.
a reason for it. I love that. Just moving on here, there was a question about how do I get my PDB credits after this session. So just a reminder that whatever email you registered under for today's session, you will receive an email after just outlining that you've completed today's course and giving you your credits. So keep an eye out for that. Dory, a couple questions for you. How do people book their appointment at Sokana to get their clients in?
Just call me, let me know. I think my information will go out there, but shoot me a text or come into the PC 9 to 2. But yeah, pretty easily, however they need to, we'll accommodate their work schedule or whatever works for you. We'll make it happen.
Perfect. And we'll send out our hours of operation. We're open 7 to 2 each day.
9.
9 to 2, sorry. Making you start way too early, Dory.
Oh, no.
9 to 2, but Dory is an early bird, as we all know. So yes, we'll put in information on how you can reach Dory. Dory, what is the construction timeline for phases 1 and 2 at Sokana?
Phase 1, 2026, and we've got spring of 2026, phase 1, and 2028 for phase 2. Yeah.
Awesome. And then let's see, I had a question here for Deryk, I believe. Deryk, what if one borrower pays for their portion in cash and the other needs financing? They still need to be on title and mortgage?
Yeah, great question. So this was brought up earlier as well. Even if one person's putting their portion in cash, if there's a mortgage on the property and that purchaser that paid in cash wants to be on title, they have to be on the other person's mortgage, right? So they will technically be liable, although the other party is probably making payments and dealing with that on their own. They have to be on the mortgage application. It's going to show up on their credit bureau. So that's something to consider. Something we have seen with, families buying properties together. Maybe the parents don't want to be involved, kind of a similar situation in the financing because they're the ones putting in the cash. We have seen some situations where that party paying cash is actually not on title and they have a separate agreement. I'm not suggesting that's the proper way to do it, but that's the only way to not essentially intertwine yourselves with the financing on the property. So you'd have to get a legal opinion on, some sort of contract of that nature.
Ivan, maybe you can just speak a little bit to, I know you touched on the co-ownership agreement, but how that can apply in this situation.
Yeah, in many situations, exactly as Deryk was talking about, one person is using their credit, the other person is using their cash. Thinks about the pet shop boys, who's got the brawn, who's got the brains, let's make lots of money. But anyway, but the agreement will make sure exactly how it's going to be divided in terms of obligations. A person who pays the cash and didn't need a mortgage, now they're affecting their credit. They have a mortgage on their name, so that they need some kind of indemnity agreement or terms inside the agreement that says that if for some reason they're affected and they have to pay for something, even though they didn't need the mortgage, then the other person who needed the mortgage will have to reimburse or indemnify. So it's a very common thing to have. But these things occur, like mortgage payments has to be made. And in terms of the lenders, as Tyler had mentioned before, it doesn't matter. Both people have to be obligated to pay, but they can't have agreements in the co-ownership agreement itself between the buyers as to who is responsible to pay what. And if they don't pay, what are the consequences? Like, let's say later on when they sell the house, they have a running total of how much payments that the other person should have paid. But the other people who are on title had to pay because it would affect their mortgage and their credit if they didn't pay. So they have all those type of things, and that's why it's so important to even anticipate things happen. People at the beginning are quite optimistic. Hey, that's no problem. We're good friends. We're buddies. But I would say that anytime you have money involved and it's a purchase and it's a lot of obligations, you have to treat it like a business. You do have to have a good agreement to cover all the potential scenarios, even if you don't think it would happen. insurance is a big thing, and payments that comes up and obligations to pay. It's not, and not just the sharing of the time, hey, can I have it for July? Can you have it for August? But also the liabilities and consequences.
Yeah. We probably see it more often, or you probably see it more often than we realize it happens where these disputes occur. Ivan, I think this question's probably for you. It might be for Blake, but Harminder purchased a unit in Sokana for the use of vacation rental, or sorry, personal vacation use, and to rent out the rest of the year. If he's not the principal resident, what are the options for him to rent this home out?
He's not the principal resident. So the idea is that you have to think about officially, running this place as a business, as if you were you have to run it like a business. It's not like you can't, for example, just get a business license and do 3 months of the year. You have to be as if you were an operator. I think like a hotel operator. And, you got to operate like a business. The entirety of the home has to be treated like a business. So.
Okay. There are ways around, or for buyers who are looking to rent it out. Blake, anything you wanted to add?
Yeah, I'd say you'd probably want to get some legal advice on it. I know with the new provincial rules, there are a few exemptions to that. There's fractional ownership agreements, there's some different things, but it's unless it's your principal resident, you're not supposed to be doing short-term rental. But there are, like I said, there are some exemptions to that, but that'd be worth exploring a little bit more. We're trying to figure out exactly how all those exemptions work for things like strata hotels, fractional agreement, ownership, and other exemptions. But yeah, I'd really encourage you to look into those. But from what we understand, you really have to be that principal resident. If there's a way to designate this as your principal residence, and then when you're not there, you're allowed to rent it out as short-term rental. No issues with that at all. But if this isn't your principal residence and you're only there for a few weeks out of the year, running that as a vacation rental could be difficult. Is there a way you could have rented out to somebody, and then they can be the principal resident and do short-term rental? We've had people do that as well. But yeah, there are some options, but it's a lot more proscripted since the provincial changes.
Okay. Jamie, if you want to weigh in on it.
I was just going to suggest the first thing you're going to want to do is write your provincial MLA about, I don't know how else to put it but you write your MLA about how the rules are affecting you and your lifestyle and your family. If it's presenting hardships, so that they can see how that's affecting the people, and possibly not helping the housing crisis, because if you actually look at it, I really doubt it is, and don't see how this could help it. That said, you do want to really look at it, and basically you can do some leases. So it's a lease is allowed. So maybe it's not a month-to-month lease, but maybe you have a 3-month lease and then it expires and then there's a month gap because maybe you're using it, and then you have another 3-month residential lease. Just throwing ideas out there. Definitely get legal advice, but you can get pretty creative.
Perfect. Thank you. Also, we will include Ivan's information here if you want to reach out to him directly on that question, Harminder. He might be able to dive a little bit deeper into it with you. I believe that wraps up all of the questions we had come through in the chat here. So thank you to everyone who joined us for today's session, as well as all of our amazing panelists who took time out of their day to be here and present with us. We'll wrap up here, and I hope everyone enjoys the rest of your day. Thanks, guys.